देखो, I am there on Twitter. I post one pic of the day every day. I am there on LinkedIn.
वो प्रैक्टिस कभी मत बंद करना,
वो नहीं बंद
बहुत
करती
अच्छा है। मैंने तो बीच में एक पूरा आपका कोलेट किया था।
हाँ, एक ट्रेजरी हेड ने कोलेट किया एंड दो चीज उसने करी, उसने मेरा पिक ऑफ द डेज उसने कोलेट किया एंड एवरी मॉनेटरी पॉलिसी के बाद मेरा एक टैगलाइन होता है, इट जस्ट हैपेंस, आई डोंट प्लान फॉर इट। सब्जेक्ट लाइन में नो सब्जेक्ट लाइन में या तो एक मूवी का डायलॉग या फिर एक मूवी का टैगलाइन होता है। सो उसने उसका भी समेशन निकाल के भेजा, बेसिकली विच रिफ्लेक्ट्स द मूड ऑफ द आरबीआई गवर्नर। तो उससे उसका कम, मैंने बोला आई एम वेरी वेरी डीपली टच्ड, आई टोल्ड हिम, आई सेड दिस इज रियली so, and then I'm on Instagram also, just kind of
I don't know, I'll follow you on Insta.
Yeah, I'm there. मैं तो हर जगह social media, that's why I'm saying that when you introduce me, saying here comes our social media diva.
अच्छा,
okay, कोई diva विवा तो कुछ नहीं,
but फिर जितना डिटेल में देखिए आज मैं आपको I'll extract as much as I can.
Hello and welcome everyone to AUM Finance Podcast. This podcast discusses the first principles of investing and is for informational purpose only. We intend to add to the body of knowledge. Please consult your financial advisor before taking any investing decision.
Hi, this is Nirav Panchmatia from AUM Finance Podcast, and this is the interview section. As you all know, the interview section of the AUM Finance Podcast, I get the opportunity to pick brain and have a brainstorming session with the leading lights in the world of money in India. Okay, so you would be wondering who I have today and whom I am going to grill today. So we have none other than Lakshmi Iyer. Lakshmi, let me formally introduce you first. You are the CEO Investment and Strategy of Kotak Alternate Asset Managers Limited. Perfect. Right? It's an 100% subsidiary of Kotak Mahindra Bank. You've been 22 years with Kotak Group.
That's
wow,
right.
Wonderful. And you manage fixed income, equities, real estate, and alternates. Is there anything left? Physical real estate is not there. You were earlier with Kotak Mutual Fund as Chief Investment Officer Fixed Income. You were also Head of Products, meaning that you were designing products for Kotak Mutual Fund, which has done phenomenally well under you. And I think Kotak AMC will miss you there. You started your career with Credence Analytics as a research analyst, right? You are an MBA from NMIMS. Lakshmi, I am also your junior from Narsi Monji.
Excellent.
Yeah, and you are the third NMIMS MBA I am interviewing in the last 1 week.
Awesome.
I think we have created many CEOs and CIOs from Narsi Monji.
Totally agree.
I thought the credit always went to Bajaj. Now NM should take the credit, right?
Right.
You were rated amongst the top 25 most influential women in asset management by Asia Investor. Personally, you are a movie buff. You are also a foodie, right? Movie buff and a foodie. So we'll talk about movies. You'll tell me which financial movies to watch. So Lakshmi, welcome and thank you for being on my podcast.
Thank you, Nirav, and it's pleasure to do this with you.
My pleasure. And as I explained, AUM Finance Podcast doesn't tell you where to, on a day-to-day basis, what to do. Here we discuss first principles. Mm-hmm. So even if this podcast would be viewed by somebody a decade down the line, still it should be relevant. That is the idea.
Fantastic thought. I think usually people focus on very topical stuff. I think this is, in that sense, thoda hatke.
Yes. So we have a different audience. Maybe we'll not have a very large audience base. But then if we can pick brains of people like you and we can teach it to the young generation,
sure,
it would be my job done.
Perfect.
So let me ask some very ABCD basic questions, Lakshmi. You've been into debt in and out. I know you as a debt person. Today I discovered that you are all over the place, right? So what is debt? As basic as that.
Yeah. So there are two ways, when a company, there are companies in India, outside India, when they come to the market, there are two ways they allow you participation into their business.
Okay.
One is the equity mode, where you become the owner, because you own a share in that company.
Yes.
And the second is in the form of debt, where they are issuing you some part of their units, and that is in lieu of some X percentage of interest. So it's a debt relationship, not a owner relationship that you have with a company.
So I just put an Insta reel, owner versus loaner. Right? So the debt guy is a loaner.
Perfect.
If I am buying debt, investing in debt, I am loaning
Absolutely.
money. If I'm making FD in a bank, I'm actually giving a loan to the bank.
That is correct.
That is debt.
So if I am a company, I am issuing you a debt worth 100 rupees.
Yeah.
And I tell you at the end of year 1,
Yeah.
I will give you 108 rupees back.
Yeah.
And that is that 8 rupees or that 8%,
Yes.
because on 100
Yes.
is the interest
Yes.
that I pay you
Yes.
for taking that money
Yes.
in debt from you.
Okay, that is debt.
Plain simple terms.
Right. What are the characteristics of debt? What are the pros and cons of debt?
Yeah. So the biggest thing is, so for example, I'm telling you, give me this money and I'm going to give you whatever, 7%,
Interest.
8%, 9% interest.
Which is fixed at the beginning of the period?
Which is fixed ab initio, yeah, at the time of
All debt
entering.
products, even the most complicated ones.
Absolutely.
The debt, so unlike equity, if we compare it with equity, your return is never fixed.
That's correct.
It is an expectations game.
That
right?
is correct.
It is a hope trade.
That's correct.
In debt, it is always fixed, whether it is from AIF or any format.
The coupon is fixed.
Coupon is fixed.
Yeah.
Okay.
But the key thing is, as you said, pros and cons. The most important thing is, how do you know
Yeah.
that I'm telling you I'm going to pay you 8 rupees or 9 rupees at the end of so and so period?
Yeah.
How do you know whether I will pay you back or no? That is called credit risk.
Okay.
Very, very important when you are loaning in this loaner business. What if you actually become a loaner? L-O-N-E-R from a L-O-A-N-E-R.
L-O-N-E-R, you become a loaner. Okay,
Correct.
wonderful.
So how do you become that? Only if your assessment when you are giving me money goes bad. For example, मेरा तो पहले से ही चोरी का इरादा था. For example, then I will never give you the money back. So I think this is the most important risk you need to assess.
The credit risk.
That's right. When you are investing in a debt instrument.
So, I mean, okay, that's a wonderful perspective, Lakshmi. See, we would assume, so they say कि debt में return इसलिए कम आता है क्योंकि fixed return मिलता है. But you are saying now that the capital is also at risk. आप 8 रुपया तो भूल जाओ, हो सकता है 100 रुपया वापस ना आए. Let's say if I don't do a good analysis.
Correct.
If I am a bank, if I am an individual. So like in old traditional India, one businessman would lend money to another businessman, right?
Yeah, yeah.
And normally it so happens that the person who is giving more interest does not have a good credit.
Correct.
And the person who is giving less interest has a better credit.
Correct.
Now people who are not aware of this phenomena, they normally tend to lean towards a person who is giving a higher interest.
Perfect.
And with the risk that they might lose. So if agar itna risk hai, why ever go to debt?
Bang on. That is true. No, but the point is that there are two parts to it. Credit risk is one of the risk. The second risk is interest rate risk. So when I know that interest rates are likely to come down, that means my fixed income or my debt instruments have the potential to make more money for me. Because आपने तो lock in कर दिया एक particular
But more
rate
यानी
पे.
कितना होगा? If you compare, I mean, so let's say it started with an 8%.
Yeah.
Yeah, YTM yield to maturity is 8%.
Correct. Yeah.
What would be the maximum upside? What is the maximum upside you've seen in your career?
No, for example, I have seen interest rates come down. When I started off my career, interest rates were upwards of 10.5%, 11%. It came all the way down to 4.5%, 5%.
Okay.
It went up again, to 8.5%, 9%, and it's back to about 7%.
So we take two periods. One scenario where you gave somebody put money in your debt, the interest rates were 10.5%.
Correct.
Went all the way down to 4%.
Yeah.
In that case, earlier you might have promised 8%. If it goes from 10.5% to 4%, what is the extra capital gain the person got?
No, so the thing is, the rule of the thumb is typically if you are investing in a 1-year bond or a 1-year debt, for example, and interest rates come down by 1%,
Okay.
you make 1 rupee.
Okay.
That is the मोटा मोटी because
So
it is
8% का 9% हो जाएगा.
नहीं 8% में आपने 100 रुपया लगाया, so interest rate came down, 8 का 7 हो गया,
जी.
तो आपका 100 का 101 हो गया. That is what it means. That is called mark to market profit or
Yes,
mark to market
yes.
invest on your
Yes.
profit this. So the basically, but if the same thing 1 rupee comes down over 3 years, then आपको 8% के बदले instead of that 100 rupees, you made maybe 100 rupee 25 paisa or 100 rupee 50 paisa. What I'm trying to tell you is that when interest rates come down, the price of your bond appreciates. And that is how you end up making money, which is called the interest rate risk.
So there's a capital gain also and
That
interest
is
तो मिल ही रहा है, 8 रुपए तो मिल ही रहा है,
Correct.
plus 0.25, 1% वगैरह मिल सकता है.
In the same example, at the end of 1 year, I get 108 rupees back.
Okay.
And one thing you need to remember is that when you are locking yourself into coupon, जब आपको ब्याज मिलता है, that coupon and your yield to maturity, on the day of the maturity, that will converge.
Okay.
बट आई एम टॉकिंग अबाउट उसके बीच में, परफेक्ट, आई एम टॉकिंग अबाउट इन बिटवीन, आगे पीछे हो गया फॉर सम रीजन, इन्फ्लेशन ऊपर चला गया, वॉर छिड़ गया, एंड 8% के बदले नाउ आई एम कमिंग टू द सेम मार्केट आफ्टर 3 months टू बोरो एट 9%, तो आपको तो नफे में नुकसान हुआ ना. इफ यू होल्ड एट द एंड ऑफ 1 year, you will get 108. बट सपोज फॉर सम रीजन यू से अभी मुझे 3 महीने के बाद ही बेचना है, देन बिकॉज इंटरेस्ट रेट्स हैव गॉन अप, आपको नुकसान में भी बेचना पड़ेगा.
ओके,
बिकॉज 8 का 9 हो गया, तो ऑटोमेटिकली 100 रुपीज का वैल्यू थोड़ा कम हो गया है, बिकॉज आई एम नाउ बोरोइंग इन द मार्केट एट 9%. So those are the nuances which is called interest rate risk, which also you need to keep in mind. But the most important thing I'm trying to highlight here is that जैसे बोलते हैं हर एक फ्रेंड जरूरी होता है, हर एक एसेट क्लास जरूरी होता है.
मार्केट रिस्क है, इंटरेस्ट रेट रिस्क है, अपसाइड लिमिटेड. देखिए इक्विटी में अपसाइड इज अनलिमिटेड, राइट, थियोरेटिकली. ओके, डाउनसाइड इज लिमिटेड टू योर कैपिटल. कैपिटल का रिस्क तो डेट में भी है, ओके, और अपसाइड कैप्ड है,
राइट.
ठीक है. तो डेट में डाउनसाइड कैन बी -100.
No, that's what I'm coming to it. The point, and your point is very, very valid. But I would say that these are complementary strategies.
Yes.
क्या आप equity में एक दिन का सौदा लगा सकते हो? Answer is नहीं. No chance. Correct?
Short term money नहीं.
Exactly. तो क्या mutual funds में या फिर जब आप when you put money in debt.
This is an English podcast.
When you put money in debt, can you put money for even 1 day? The answer is yes.
Yeah.
Can you put money for 1 week? Answer is yes.
Okay. So
that is the biggest advantage.
Short term and medium term money, so 1 month money, 3 month money we put into liquid mutual fund or debt.
Correct.
Okay, so that cannot be put into equity.
No, that should not be put into equity because the risk is significantly different.
So then let's divide into 2 parts. It's clear that I have a 3 to 5 year money minimum.
Correct.
So I may completely ignore debt. But if the money is couple of weeks to let's say 24 months,
correct,
then I do not have an alternative but to look at debt.
Perfect. Also, I would also add to it that if you have a 3 to 5 year kind of a horizon, I would still say predominant portion of your monies can go into equities.
Yes.
But tail end, whether it is those unforeseen circumstances, exigency planning, what you call your emergency or corpus contingency, all that money can still be wired into fixed income.
Some portion.
Some portion. It could be tail ended, but that's fine. So there is no cookie cutter approach. There is no one size fits all. Also, credit risk is only when you are dealing with lower end of the spectrum. If you are lending to government of India, for example, which is sovereign.
Yes, we have those instruments 2 years back.
Zero credit risk.
Government, so we have some debt, please highlight that. We had some debt mutual funds coming in last 2 years, like 18 months, where you're lending to the government of India, which has never defaulted, or to the state governments.
Perfect.
And still we were getting around 8%.
Perfect.
तो उससे ज़्यादा better credit में, तो credit risk आप zero मानोगे उसमें?
Definitely, that is the
सिर्फ
purest.
interest rate risk है उसमें.
There is an interest rate risk which I explained, तो उसमें कोई दिक्कत नहीं है. But you have to live with that because, as I told you, if you live your tenure, even Brahma cannot come from Brahmaloka and take away your returns.
So
that
if it is a
funda.
3.5 year product, okay, और 3.5 साल में बना रहा, if I stay put for 3.5 years, credit risk is zero and interest rate risk is also zero.
Absolutely, because you're locked into maturity, no?
Okay.
So you will live through all the ups and downs.
So on day one, I know कि 3 साल बना रहा होगा. If I am there 3 years, 3.5 years, this is the return I'm going
Mota moti, you will know depending on the nature of the instrument.
Okay.
That's how it is.
But debt then is an instrument for wealth preservation.
Debt is Nimbu Pani, correct?
It is not an instrument for wealth creation.
It is not your Red Bull, correct? It is not a caffeine.
Red Bull नहीं है.
It is not your caffeine boosters. उससे steroids नहीं मिलेगा.
Okay.
But I can have नींबू पानी गर्म पानी में.
हर बार Red Bull भी नहीं पी सकते.
हर बार Red Bull भी नहीं पी सकते.
You can cause heart attack also.
Absolutely. Or it is not your caffeine shot. Let me put it that way.
Okay.
But नींबू पानी is something I can have in room temperature water. I can have it in cold water. I can have it in hot water, depending on the weather, depending on the season.
And it gives instant energy.
And it gives you, it refreshes you.
Okay.
So fixed income is your refresher.
Fixed income is a wealth preserver.
Correct.
At best.
And it's your stability provider to your wealth because it refreshes your, and equity is your caffeine booster or your steroids booster on the portfolio.
So there are these GSEC funds which, if your entry was right, which didn't have a credit, GSEC is government securities.
Correct.
Okay, when you lend to the government.
Yeah.
And there have been cases where there also you got higher double-digit returns.
Absolutely.
Like equity, if you timed it right, credit risk नहीं था, सिर्फ interest rate risk.
Absolutely.
तो उस समय वो Red Bull बन जाता है.
उस समय वो रेड बुल टैक्टिकली बन जाता है बिकॉज इट गिव्स यू दैट एंड टाइमिंग इज नॉट एवरीवन्स कप ऑफ टी ऑनेस्टली
पोस्ट फैक्टो पता चलता है
करेक्ट पोस्ट फैक्टो पता चलता है बट देयर आर साइकिल्स देयर आर स्टेजेस इन द larger picture of the economy where you know ki yaar now there is going to be an extended period of pause and this pause is going to be most likely
so you're
followed by
saying
rate
with
cut.
proper study with proper grip somebody like you can predict that
We can assess that जो हम बोलते हैं in our parlance and I joke I jovially share this with my colleagues that हम थोड़ा educated तुक्का मारते हैं
अच्छा
okay and then we are able to yeah because we are able morning till evening constantly we eat drink and breathe the markets
yes.
so we are able to do
Judge
that
it.
a little bit extra value add but our principle has always been that you need to be 7 on 10 times right to be able to overall make an impact on the client's portfolio.
So this phenomena where a debt fund once in a while gives you let's say higher double digit return even a 20% return this will how infrequent this phenomena is
whenever you are at the cusp of the change in an interest rate cycle which happens usually on a rotation period in a block of maybe 3.5 years approximately.
Every 3.5 years this is possible 3 to 5 years.
No, what I'm saying is intensity could be different. For
so
example,
you're saying a rising rate get converted into a falling rate
yeah.
or a falling rate जैसे US Fed में अभी people are predicting
correct.
now it is the peak
correct
and now probably the US Fed will start bringing the interest rate down
correct
so this is that scenario
so our assumption is in the year 2024 calendar year you are likely to see more rate cuts across the globe than rate hikes
okay
and if that were to be true
this is that change that you're
absolutely then this could be that opportunity for fixed income. I won't really comment about 20 24 25% kind of returns because your interest rate is at 7% 7 quarter so ballpark if and let's take people understand
7.5 is in India
I'm talking about India the 10-year benchmark in India is at 7.25 today
yes.
For example and this was back in say 2000 it was at 10.5 so 10.5 coming to 7% you make 21 rupees because the 10-year ka bond ka jo duration hota hai that is approximately 7 years so today for example in the same example I'm at 7.25 at the end of 1 year if interest rates come down by 1% this 10-year bond will make me a capital gain of approximately 7 rupees. Okay.
Every 1% fall will give you
7 rupees gain on a 10-year bond.
Okay.
It will give you 1 rupee gain on a 1-year bond.
Okay.
It will give me 3 rupees gain on a 5-year bond.
Because it's a 10-year bond, you get a leverage.
Correct.
And it is multiplying it.
Because the duration is higher, no? So that is the reason. Now in the same example, 7 rupees of capital gains plus 7 rupees of coupon, mota moti in 1 year, if interest rates come down by 1%, and I am invested
in a 10-year bond,
or in a fund which has a duration of 7 years, approximately my returns will be in the band of 13 to 14%. This is the broad math.
Are we positioned at that place right now?
Okay, so I would say because today the yield curve, abhi 1 year is over here at 7.05, 10 year is at 7.25, and 3 year, 4 year, 5 year bonds are also. So the yield curve, jaise in our parlance, flat, chapta. Okay, the extreme flatness of the yield curve is telling you that on a risk reward basis, most of them are still preferring the 3 to 5 year segment, which means again in our same example, if you are running say a 3.5 year kind of a duration portfolio, 1 year down the line, if this rate comes down by 1%, approximately you are earning 10 to 10.25% on your total portfolio.
Why not 10? Okay, so this is
if
an
it's
optimum.
If
this
it's
is
a 3 year.
3 year, 5 year is an optimum.
I'm just giving you all the scenarios to tell you, but this is all assuming that interest rates come down by 1% in the next 1 year.
And you are assuming because US Fed and the world are going to bring it down, then India is to follow.
Yeah.
And we'll in tandem.
That's right. But I think the 1% in 1 year, while the trajectory in the direction of rate easing is clear, I would
quantum
say,
is not clear.
Quantum I would say will still be in the band of 0.25% to 0.5%, which means that if you are investing in fixed income today and you are trying to create a portfolio around 7.25 to 7.5, I think, and I take this as a 3 year window, it is very safe to assume that 7.5 to 8% kind of returns is not impossible in fixed income over the next 3 years. Whether it's a bond, whether it's a mutual fund.
And a capital gain is a given. You said the trajectory of it going down is confirmed. The quantum is not confirmed. So
That's
if I
right.
hold it for the next 3 years, if I go for a 3 to 4 year bond,
Yeah.
a GSEC product,
Yeah.
hold it for 3 years, it is
Yeah.
very likely that I'll get 7% plus something.
Which is a fair assumption to take at the current juncture.
Okay.
And then you can decide ki yaar, I don't want to hold it for 10 years. I want to exit at the end of 3 years.
Yes.
It's absolutely your prerogative.
Yes.
But sitting here in 2023, I can give at least 7 to 8 on 10 probability that 3 years from today, the interest rates where we are today is likely to be at a lower pedestal.
less than today.
And therefore, the chances of adding something extra to your coupon is reasonably high.
Lakshmi, I am a fan of Warren Buffett.
Okay.
And he says if you have spent 15 minutes trying to predict the interest rate, you wasted 15 minutes.
Yeah, but you can't predict. That's what I'm saying. That's the nature of the market,
So it's
right?
a probability, a possibility.
It's always a
because there
probability.
are too many ifs and buts, and you've been a veteran,
Yeah.
so you know it.
Absolutely.
ये possibility है, it's a big possibility, but
Correct.
things can. जैसे COVID आ गया
See,
था.
I'll tell you, everything is ceteris paribus as is where it stands today. And as a money manager, I have to take a view of the future. Right, wrong, time will tell. That outcome will be shown in my performance, and ultimately that is what investors actually put money for.
Yeah.
So, as I said, as a money manager, the endeavor is not to be 10 on 10 right. Because अगर वो होता तो मैं घर पे बैठ के अपना पैसा मैनेज कर रही होती.
तो
Correct?
10 में से even if you hit
I
7
think
out of 10 times,
yeah, 7 is a reasonable good strike
and you have
rate.
to take that call.
You have to take that call. See, in a money manager's world, it is only 0 or 1. So it is binary. If it is a gray area, it has to go either in black or white.
You have to take a call.
You have to take a
if somebody
call.
gives you money, आपको deploy करना है और आपको call लेना है.
Perfect.
Okay, good. What are alternates? And from a layman's perspective.
So alternates are anything which does not sit in a plain Jane fixed income, a pure play equity.
So we discussed debt and equity. Alternates is neither.
No, alternates is another vehicle or a form of ownership of all of these, and they include certain more, I would say, realm of unlisted world. For example, private equity is alternates.
Private equity is alternate.
Yeah,
Unlisted
then,
is alternate.
Unlisted, all private equities are unlisted. Depending on which stage of the investment, whatever you are investing in equities today is predominantly in the listed space. So you know that, oh, there is, you know
the
it's part of
price discovery
everything.
discovery
Price
100%
discovery is
transparency
almost,
there.
yeah. Whereas when you go into the private equity world,
You're going into the gray area.
you are going into a, I would say, a relatively under-explored area as far as the Indian diaspora is concerned.
Very under-researched, and you have to take a call on some unquantitative
It is not
factors.
under-researched, Nirav. It is, I would say, less popular, especially because outside of India, and especially which is money outside of India, which is coming into India to own these opportunities. Look at the number of unicorns in India. Okay, so every company before being a unicorn would have gone to raise that $1 million, $2 million, $5 million check.
Yes.
So private equity world allows you to be partner in that growth story, but being in the extremely high risk zone. Do I know 5 years from today or 7 years from today, this investment that I am going to put into this particular, say, pharma company, which is going to be doing, cancer stem cell research, for example, I do not know. It's a toss of a coin. But I have to dig deep as a money manager and find out what kind of opportunities, how is it looking. So I'm saying it's a very, very different web of investment opportunity. Definitely for the more initiated investor, definitely for one who says that, okay, abhi bahut ho gaya curd rice, ab mujhe curd rice mein thoda spike karke de do. I am willing to take the risk appetite on my stomach.
Okay. So alternates is only private equity, or is it something more than that?
Alternates is private equity. Alternates is real estate. If you want to do, a combination of high yielding real estate projects, you want to do.
So real estate in physical form or in a financial form?
Both
Via
the forms.
REITs and all.
Both the
can
forms.
Be
Yeah. So you can do projects as part of a real estate fund under alternate investment vehicle. You can actually evaluate projects. You actually go ab initio and you be partner along with the developer in a big project.
So you choose a couple of developers, let's say in a particular city.
Absolutely.
In Bombay, you select 5 best developers.
Correct.
And you say, I am giving money.
Correct.
You develop the projects, I'll partner with you.
Absolutely.
That
Not
is also
partner not on development. Partnering in terms of their progress on the financial side. I'm talking about...
You're only a financial.
Yeah.
Only a financial. You're a provider of capital.
Provider of capital. So basically, alternates space is actually allowing for the capital allocators meet with those people who
need the capital.
Perfect.
That is alternate. So alternates can be real estate, it can be private equity. What else it can be?
It could be private credit. Again, this
so please explain private.
Yeah, so credits again, if you go to the normal debenture and NCD kind of.
These are all public credit. Where there's an instrument. If I put money in a debt mutual fund, these are public credit.
No.
There's no such word, but
no. It's not. There is no public credit. But what I'm trying to say is there are certain mid-market companies, like how you have mid caps and small caps in the equity parlance. There are some companies which are probably unlisted, not really known to the general population at large. But they also have capital requirements. These capital requirements can be funded through equity route, as I mentioned. But some of them are at the growth stage of their business. They are into acquisition, for example.
They don't want to share equity.
No, they don't want to share equity because they believe in long-term story. Probably they want to buy out, so they want to do acquisition financing.
Okay.
So private credit market addresses all these needs where they are there as a debenture. They write checks as debenture holders.
So is it a one-to-one transaction?
It is predominantly bilateral, yeah. So 1-to-1, 1-to-2, or
So
that
people
kind of
like you who are suppliers of credit, they'll approach you, and the agreement would be a bilateral agreement between you and the party. That is private credit.
That is absolutely correct. So we go and meet the investee company, we meet the promoters, understand their business model, their DNA, and then once that ticks the box. Basic कुंडली जैसे हम बोलते हैं वो basic कुंडली 36 के 36 गुण नहीं मिलेंगे. Once the basic smell test is right, then we go down into structuring. Okay, we would like to provide. Okay, you require $100. We believe that you can give me this as a collateral. So we structure it in such a manner, and these are all secured credit that predominantly one focuses on. And then you start transacting.
All private credits are secured credit.
Not necessary, but
because it's bilateral. So if you ask for a mortgage, they'll give you. If sometimes they say we cannot secure, then it can be unsecured.
It could be, but I'm saying at least for the ambit that we operate in, our preference, we would prefer secured because this is a mad world. So the intention one side, but we need to see.
And it is private.
And
there's
plus,
no exit.
No, exit is not easy. So usually these funds are closed-ended funds under the category 2. Of AIFs. That's correct. Because you require longevity as a money manager. You cannot give me money today and after 6 months because your mood changes as the weather changes. You say, I want to exit. How do I exit? It's very difficult.
Yes.
Thank you for listening to the AUM Finance podcast. Remember that all investments are subject to market and other risks, and one should read offer docs and other documents carefully before investing.